Hello, and thank you all for joining us for this 5G and wireless services edition of the Gabelli podcast series. This is Terry Pope, a member of GAMCO's institutional team, and with me is Sergey Dluzhevskiy, portfolio manager for the Gabelli Global Content and Connectivity Fund and lead communication services analyst at GAMCO Investors. For the next 15 minutes, I'll host a conversation with Sergey where he will share investing insights for the wireless services industry. Welcome, Sergey.
Thank you, Terry.
So let's begin with the 5G market. As consumers, we hear more and more about 5G, and we see ads on TV highlighting various capabilities of 5G networks and devices. Could you summarize for us what 5G is?
Great. Absolutely. 5G is one of the key trends of digital revolution in the connectivity world. It is the next generation of wireless network technologies that is expected to enable massive digital transformation of our society. 5G is expected to provide super fast data speeds in excess of 1 gigabit per second with peak rates up to 10 gigabits, ultra low sub 1 millisecond latency, and ability to connect up to 100 times more devices than today's 4G networks. And before we further discuss 5G's capabilities, I wanted to provide a little bit of a historical context. So over the past 4 decades, wireless networks, mobile devices, and services they enable have undergone major evolutionary changes, with new generation of technology appearing about every 10 years or so. The industry has come a long way. I think some of us may remember bulky analog phones providing basic voice service from the 1980s, or we've seen them on TV, but today we have mobile broadband experience with speeds going to over 100 megabits per second, with peak rates approaching 1 gigabit on 4G LTE networks. So 4G helped unleash the social networking phenomenon and enabled the sharing economy, supporting companies like Uber and Airbnb. So we're around the turn of the decade again, and the new generation of mobile technology, 5G, is coming. In fact, it's already here. First commercial 5G networks were launched in the US and South Korea about 2 years ago, and currently there are nearly 180 5G mobile network deployments around the world. In the US, while Verizon launched its 5G network earlier, T-Mobile actually was first to claim nationwide 5G coverage and currently covers 305 million people on extended range 5G using low band spectrum, and expects to cover 200 million people with ultra-capacity 5G using mid-band spectrum by the end of 2021.
So what's driving the development of 5G? What are some of the use cases that will be enabled by this new generation of network technology?
So key drivers for the development of 5G include rising demand for broadband over mobile networks, as well as aspirations to enable services for the Internet of Things. Global mobile data traffic is expected to increase by a factor of 4.5 between 2020 and 2026, when about 54% of that traffic will be carried by 5G networks. So what is driving this rapid growth? I would say primarily video, now embedded in most online content. The world wants to stream its content in 4K definition and play online games on multitude of devices. The pandemic certainly accelerated adoption of online video conferencing, collaboration, learning, and telemedicine solutions. And by 2025, video is expected to represent over 75% of total mobile traffic, compared to 63% in 2019. 5G will provide not only higher speeds and low latency, but also a foundation for completely new use cases, including autonomous vehicles, immersive gaming with virtual reality elements, remote surgery, and unprecedented factory automation. And while 4G growth will continue, accounting for nearly 56% of global connections, excluding IoT, by 2025, 5G connections are expected to reach about 1.8 billion worldwide during that time frame, amounting to about 20% of global total.
So you mentioned the Internet of Things as one of the drivers for 5G. Could you expand on that subject?
Absolutely. 5G will certainly be critical to the proliferation of the Internet of Things. The number of IoT connections is expected to more than double over the next 5 years, reaching 25 billion. With smart buildings being the largest growth sector, driven by proliferation of connectivity across enterprise assets and devices like lighting, HVAC systems, security, and automation. And telecom operators are uniquely positioned to provide the connectivity that forms the basis of IoT ecosystems and layer security and quality of service on top of that connectivity base, becoming true enablers of the IoT era.
So do wireless carriers have everything they need to build high-quality 5G networks, or are regulators on the same page with the industry?
Yeah, I mean, this is an interesting topic. So to fully realize the 5G future, operators need timely release of spectrum. They will need more spectrum and wider channels than in the past. And when I talk about spectrum, I'm basically talking about the invisible radio frequencies that wireless signals travel over. Portions of spectrum are grouped in bands depending on their wavelengths or frequencies. And today's wireless networks are built primarily on lower band spectrum, below 3 gigahertz. While offering broad coverage and superior propagation, those lower bands tend to have relatively poor capacity, as this spectrum is in limited supply and only narrow bands are available. In contrast, higher frequency bands tend to provide greater capacity, making it easier to create broad channels, allowing more information to be carried at ultra-fast speeds. However, they travel much shorter distances compared to lower bands, so there are trade-offs. And while 4G LTE has been designed with 20 megahertz spectrum channels in mind, 5G requirements call for at least 100 megahertz per channel and up to 1 gigahertz in higher frequency bands. Such sizable spectrum demand will require regulators to release considerable amounts of new spectrum. And they're doing it, not just in the US, but globally. It is fair to say that over time, the industry will be utilizing all spectrum bands for 5G. However, in the near to medium term, mid-band spectrum, or frequencies sitting between 1 and 6 gigahertz, has emerged as Goldilocks spectrum, providing good balance of propagation and capacity, and will likely be the primary foundational spectrum for 5G over the next 5 to 10 years.
So in the U.S., the Federal Communications Commission, or the FCC, is a regulatory agency that administers spectrum for non-federal use. So it held an important mid-band auction earlier this year and will be having another one in October 2021. So could you briefly discuss these auctions and their impact on the wireless industry in the U.S.?
Absolutely. So the value wireless operators are placing on mid-band spectrum had certainly been demonstrated in the recent FCC auction 107, or so-called C-band auction, that broke wireless auction records with net profits to the U.S. Treasury of $81 billion and all-in costs for participants, including accelerated allocation payments for satellite companies and estimated clearing costs of about $95 billion. A combination of several factors made the spectrum particularly attractive and drove the price. First of all, it is an international band used or expected to be used in a number of countries. There was a perception that this was one of the last sizable chunks of mid-band spectrum to become available without caps on the amount of spectrum purchased by a single bidder or a need to share it with various government agencies. And finally, Verizon and AT&T, quite frankly, desperately needed to catch up to T-Mobile in mid-band spectrum position. As a result, Verizon ended up with all-in costs of $53 billion and AT&T with $27 billion. With that said, both companies are still trailing T-Mobile in mid-band spectrum. And as you mentioned, there is another spectrum auction coming up later this year, FCC Auction 110, which is expected to start in October. And Congress, in its last year's Consolidated Appropriation Act, actually required the FCC to start the spectrum auction by the end of the year. So it's a requirement. The spectrum being auctioned is in the 3.45 gigahertz band. So this is another mid-band frequency. The FCC will be auctioning 100 megahertz of spectrum in 10 blocks of 10 megahertz each per geographic area. While this spectrum is in the same zip code as C-band, there are a number of differences. First of all, the FCC adopted a cap or aggregation limit that prevents any entity from holding more than 40 megahertz in any licensed area for 4 years post-auction. There was no such cap with C-band. Secondly, just like with CBRS, which is another spectrum band which was auctioned in 2020, licensees will need to share the band with federal agencies. So currently, the 3.45 gigahertz band is used by the Department of Defense for radar systems on a variety of platforms. And given these limitations, we expect 3.45 gigahertz spectrum to cost less than C-band on a per megahertz POP basis.
So given everything we've discussed so far, what type of company should benefit in the 5G world?
We believe there are 5 broad service provider groups that could be viewed as 5G beneficiaries. First, wireless carriers with sizable spectrum positions. You need a lot of spectrum and wide channels to offer 5G speed and capabilities. In the U.S., T-Mobile has the largest low and mid-band spectrum position, with over 300 megahertz of spectrum across those bands. Second category, large-scale integrated telcos. Verizon fits this profile, combining the largest mobile operator in the U.S., serving over 120 million retail customers with fiber-rich wired footprint inside and outside of its northeast incumbent area. Third, fiber providers. Fiber will become an increasingly important backhaul solution for wireless operators in the 5G era. Lumen Technologies has the third largest fiber network in the U.S., which cannot be overlooked and should become more valuable in the 5G world. Fourth category, tower companies and small cell providers. They should benefit as well, as new spectrum bands get deployed on towers and small cells, which become important elements of network densification with 5G. And Crown Castle, which is a tower company and the fiber provider, also operates the industry-leading small cell platform with 80,000 on-air and under contract nodes. And finally, spectrum plays, or owners of largely underutilized spectrum. In this category, Dish network is simply the largest. The company amassed over 35 billion megahertz POPs of spectrum across low and mid-band frequencies. And it should now be in a better position to build a wireless business and monetize the spectrum portfolio with the help of its long-term MVNO agreements with T-Mobile and AT&T.
So is there one company that you view as particularly well-positioned and can expand on?
Absolutely. So I wanted to highlight T-Mobile as an attractive investment idea and one of the companies that should benefit in the 5G world. T-Mobile has 1.25 billion shares, trading around 142 for 178 billion equity market cap, net debt of 75 billion, enterprise value of 253 billion. So first of all, as I have already mentioned, in the 5G world, having a strong spectrum portfolio is crucial. With acquisition of Sprint and adding its West 2.5 gigahertz spectrum position, T-Mobile has the largest mid-band portfolio in the country, with mid-band representing the sweet spot and good balance of propagation and capacity, as we already mentioned. T-Mobile's low and mid-band spectrum depth nationwide is 340 megahertz. That's about 50 megahertz higher than what Verizon and nearly 120 megahertz more than what AT&T will have in December 2023, when all C-band gets cleared. So over the next 2 years, T-Mobile's lead is even larger. So this strong mid-band position should allow T-Mobile to build a high-capacity differentiated 5G network on wider channels and offering higher speeds to its customers compared to competition until C-band spectrum will be actively put to use by wireless operators. So that would represent a time to market advantage of 1 to 2.5 years, depending on the market. Second, the combination with Sprint, which closed in April of 2020, offers very significant synergies with NPV of over $70 billion and eventual $7.5 billion annual synergy run rate, which is 25% ahead of the company's original merger plan. And we believe this is achievable by 2025. About 2/3 of those synergies will come from combined network cost savings. Third, with nearly 105 million branded customers, the combined company finally has the scale and resources to supercharge T-Mobile's innovative Un-carrier strategy and even better compete with AT&T, Verizon, and cable companies entering the wireless sector. T-Mobile also intends to compete with fixed broadband operators in the in-home broadband market, and I think consumers would welcome that. The company is targeting getting to 7 to 8 million broadband customers in 5 years with its fixed wireless broadband offering. And finally, the broad communication sector in the U.S. Will continue to consolidate. T-Mobile remains a unique growth asset in the wireless industry with strong spectrum position and operating momentum, rapidly improving free cash flow with potential for meaningful stock buybacks in a few years and significant strategic optionality. And in regards to buybacks, the company noted at its recent investor day that its free cash flow growth profile is setting up flexibility for potentially up to $60 billion worth of stock repurchases between 2023 and 2025. So we continue to view T-Mobile as essentially the only way for a domestic or foreign company to enter the U.S. wireless market in a meaningful way. And in the long run, we believe T-Mobile could be an attractive acquisition target for cable companies like Comcast or a joint venture of Comcast and Charter or technology companies. We believe that T-Mobile should command 10.5 to 11.5 times EBITDA multiple in a buyout scenario, and our 2022 private market value estimate is north of $170 per share, growing to over $200 per share on 2023 numbers.
Well, thank you, Sergey, and thank you all for listening to Gabelli Media, and we look forward to you joining us for our next podcast.
Thank you, Terry. Thank you for having me.
In this episode, multiple companies were mentioned. Our company owns less than 1% of the following: Uber, ticker UBER, Airbnb, ticker ABNB, T-Mobile, ticker TMUS, Verizon, ticker VZ, AT&T, ticker T, Lumen Technologies, ticker LUMN, Dish Network, ticker DISH, Crown Castle International, ticker CCI, Charter Communications, ticker CHTR, Comcast, ticker CMCSA. One of our affiliates serves as an investment advisor to Verizon or affiliated entities and has received compensation within the past 12 months for these non-investment banking securities-related services. After today's discussion, I must read the following disclosure. Equity investments are affected by market conditions. The intrinsic value of the stocks in which our portfolios invest may never be recognized by the broader market. The opinions expressed are current as of August 24th, 2021, but are subject to change. The information provided in this podcast does not provide information reasonably sufficient upon which to base an investment decision. It should not be considered a recommendation to purchase or sell any particular security. Portfolio holdings are subject to change. The performance of any single portfolio holding is no indication of the performance of other portfolio holdings of any strategy or fund. Comments made on any individual company or stock is not an indication that it is currently held in a portfolio, nor is it an indication that it ever will be held in a portfolio.